in the last presentation, where we discussed the basis of charge of basic salary and leave salary. So, here we shall discuss the concept of gratuity and pension.
What is gratuity? Gratuity is a gratuitous, the name itself makes it clear, it's a gratuitous payment made by the employer to the employee at the time of his retirement. It's paid to both government and non-government employees. Similar to what we did in case of leave salary, where you first take the amount that you receive and then deduct the amount exempted from that. In gratuity also, we shall first include the amount of gratuity in salary and then give exemption. So let's take a case to hypothetically understand what is the method of taxing the gratuity. Let's say your basic salary is 1,20,000. Let's say your DA is 12,000. We'll stick to the same simple figures. Let's say your commission is a fixed amount of 10,000 and DA we are assuming as not being part of the salary. So DA is not a part of salary. This is only to keep your calculations simple. Now, the employee retires, and earlier we had done that he receives leave salary. And in leave salary, whatever computation we have done in the last class, the taxable part we shall consider here. Let's say hypothetically it is 1 lakh. Now he receives gratuity, and for gratuity again we need to find out the amount which is exempt from tax. Let's say he receives a gratuity of 22 lakhs. From this we shall give a deduction for the amount which is exempt from tax. And to find out this amount of gratuity exempt from tax, we need to follow certain rules, which are different for government employees and non-government employees. For a government employee, similar to what we did in case of leave salary, that it is exempt from tax, so is it exempt from tax for gratuity. So a government employee does not have to pay tax on the amount of gratuity, 22 lakhs, that is receiving at the time of retirement. But a non-government employee gets an exemption subject to a limit, and the limit is 20 lakhs. And why 20 lakhs? Again, because this is a lump sum amount. Wherever we have a lump sum, it basically means exemption cannot be more than this. So while we had 4 figures of which we chose 1 as exempted, here we have 3 figures out of which we choose 1 as exempted. And these figures would depend on whether the employee is a part of Gratuity Act 72 or he is not covered by Payment of Gratuity Act 1972. So if he is covered by Payment of Gratuity Act 1972, the rule is different. If he is not covered by Payment of Gratuity Act 72, the rule is different. The question will very clearly specify whether or not he is covered by Payment of Gratuity Act 72. Now exemption, least of the three. Now see, what's the difference? First, 15 days salary for each year of completed service. So what do we find out? First, we shall find out his total service. For every 1 year of service, we shall find out 15 days of salary. So what do we do here? But here we do not say 15 days, we say half month salary for each year of service. So what is the difference between 15 days and half month? There has to be a difference. Otherwise we could have written here also half. So it's 15 days of salary for each year of completed service, half month salary for each year of completed service if you are not covered by the Gratuity Act. Second, 20 lakhs. Either way, for both the situations, it is 20 lakhs. However, earlier you have received any kind of an exemption, you have claimed any kind of an exemption, then 20 lakhs gets reduced by that amount. You have done a job earlier, you got gratuity then, out of which 9 lakhs was say exempt. So now this 20 becomes 11. And gratuity actually received. Actually received always has to be a part of the figures that we find out for exemption, because there's a possibility that whatever you receive, it is exempt, right? Because if this happens to be the least, you receive 22, but the maximum exemption cannot be more than 20 here. So if you get a lesser amount of gratuity, lesser than 20 lakhs, it is possible that the entire amount of gratuity is exempt from tax. So we have amount actually received. Now here, similar to leave salary, we need to have certain points to be kept in mind. 1. Year of service means what? We have different rules for those who are covered by the Payment of Gratuity Act and different rules for those who are not covered by the Payment of Gratuity Act. If you are covered by the Payment of Gratuity Act, then months are considered as 1 year provided you have worked for more than 6 months. So, let's say you have put in a service of 39 years and 10 months. Or you have put in a service of 39 years, 5 months. Right. So if you have worked for less than equal to 6 months, we ignore the months. But if your service has more than 6 months to your credit, in addition to the completed years, that would be considered as 1 year. So, if you are covered by the Payment of Gratuity Act and you have a service of 39 years and 10 months, then your service would be counted as 40 years. More than 6 months, 1 year. But if you have worked for 39 years and 5 months, your service would be considered as 39 years. Then we ignore the months. This is for those covered under Gratuity Act 1972. But if you are not covered by Payment of Gratuity Act, let's do it simultaneously. If you are not covered by Payment of Gratuity Act, then it is same as we have done in case of leave salary in the last class. The fraction of the year is altogether ignored, whatever number of months you must have worked for. Even if you worked for 39 years and 10 months, your years of service would be taken as 39 years and not 40, even if your months are more than 6. So this is the first point of difference between those who are covered under Gratuity Act and those who are not covered under Gratuity Act. Second point of difference is in understanding the meaning of the term salary. For gratuity not covered under Gratuity Act, for employees not covered under Gratuity Act, the meaning of the term salary is same as that we have done in leave salary. That is basic, always, DA conditional and commission conditional. So DA conditional if it's a part of salary, commission conditional if it's a percentage of turnover. So we have to first find out salary for 10 months. Now 10 months what? 10 months preceding the month of retirement. In leave salary, we had an average of 10 months preceding the retirement. So if an employee retired in December, your 10 months would be December backwards. You retire in March, 10 months would be March backwards. March, February, January, December, November, October, September. But for gratuity, it is 10 months preceding the month of retirement. So preceding the month of retirement means if you retire in the month of March, we shall not take the salary of March. We shall move backwards from February. So we have February, we have January, we have December. So we keep moving backwards for 10 months. It's always easy to go by numbers. February is the second month. So 2, 1, 12, 11, 10, 9, 8, 7, 6 and 5. Fifth month is May. So 10 months will be February to May. February 21 to May 2020. So we want the salary for 10 months preceding the month of retirement. When? If you are not covered by the Payment of Gratuity Act, only then. But if you are covered by the Payment of Gratuity Act, then salary is not taken as average. That is salary last drawn. We take the last drawn salary. You retire in March. What is the salary that you are drawing in the month of March? And which salary? It's basic and DA. DA, always. DA is a part of salary, DA is not a part of salary, doesn't matter, we shall take DA. Now for not covered under Gratuity Act, DA conditional, commission conditional. If you are covered under Gratuity Act, DA is always taken whether or not it's a part of salary, commission is never taken. So that's how we arrive at 1 month. Last salary has to be 1 month. So from that 1 month salary, we have to arrive at the figure of 15 days salary. And here from the average naturally means 1. So for last 10 months, you get your salary divided by 10, you get an average salary of 1 month. So multiply that 1 month salary by half because we are taking here half. So this is half months of salary. So let us say your salary for 1 month is say 30,000. We multiply this by half. This is for 1 year of service. You have worked for 40 years. So your figure comes out to half month's salary. What is this 30,000? This 30,000 is average for 10 months preceding the month of retirement. So for 1 year you have 30,000 into half. For 40 years you have 30,000 into half into 40. Now, if you are covered under Payment of Gratuity Act, whatever salary, of course, this will be different. This is basic plus DA. We do not take half. Here, we take 15 days. So we have 30,000 multiplied by 15 over 26. This is for 1 year of service. We have worked for 40 years. This is 40 years. Right? So, this is the difference. 3 terminologies. Difference in 3 terms. 1, completed years of service. Gratuity Act, we include months. Here we don't. 2, Gratuity Act, we take basic and always DA, whether or not a part. Here we take if DA is a part. Additionally, we take commission if it's a percentage of turnover. 1 month salary, we calculate as 15 by 26. Here we calculate as half month. 1 by 2. Right? So, if you receive gratuity here, 22 lakhs, we have to find out the amount of exemption. Point number 1. Let's say lump sum. 20 lakhs. Point number 2. 22. 22 lakhs. What is this 22 lakhs? The amount of gratuity actually received. And point number 3, let's say you are covered by Payment of Gratuity Act. So we have this. Per month 30, half month 15 days, 15 by 26, 40 years of service. We have 30,000 into 15 by 26 into 40. So this comes out to 6,92,308. And we take the least of these. And least of these happens to be 6,92,308. So we have here 692,308. So this being the amount of gratuity exempt if you are covered by Payment of Gratuity Act, and if you are not covered by Payment of Gratuity Act, then we would have taken 30,000 into half into 40. So the taxable part of gratuity now would be 15,07,692. We write here 15,07,692. So see, we move a step further. We have basic, DA, commission, gratuity, leave salary, and we arrive at gross salary. So far, these are the figures that we have for gross salary. Okay. So we have here another example. X retires from a company on, say, 31st December 2020. He's worked for 34 years and 9 months. Now, if he's covered by Gratuity Act, we'll take it as 35 years. If he's not covered by Gratuity Act, we'll take it as 34 years. Right? He receives 4 lakhs as gratuity. Simple case, hypothetical situations. We are also given the average basic salary for 10 months preceding retirement is 20,000 per month. So we need average if it's not covered by the Gratuity Act. Is 20,000 per month. So this is average of basic DA commission. Here it is the basic salary. Of course, we'll take it. Commission is fixed, will not consider. DA is not a part of salary, will not consider. Otherwise, what would we have done? We would have taken 10 months of basic. Had DA been a part of salary, 10 months of DA. Had commission been a percentage of turnover, 10 months of commission. We always have commission for 1 year, so we'll reduce it to 10 months. So together, we will add this and we have this salary for 10 months. Divided by 10, we have 1 month. And that 1 month into half if you are not covered by Gratuity Act. You receive DA 2,000 per month, out of which 50%, let us say, is part of salary for retirement benefit purposes. So see, we have a case here where 50% will be part of the salary. So taxable DA for computing gross salary will be full DA. But for exemption purposes, we shall consider only 50% of DA, half of DA. He has earlier claimed exemption of gratuity worth rupees 50,000. So this 20 lakhs gets reduced by 50,000. As I said, this is a one lifetime exemption of 20 lakhs. It is not a job, per job 20 lakhs. Now, if you want to find out the amount of gratuity exempt from tax for both the cases, if you are not covered by Gratuity Act, is also if you are covered by Gratuity Act, how do we go about it? Your basic question would continue like this. You first have basic, you have DA, then you have gratuity. For gratuity, we want to find out the taxable amount. Now, as per the question, you receive a gratuity of 4 lakhs. So we have actual gratuity 4. You may or may not be covered by Gratuity Act. Actual amount remains the same. Amount exempt from tax, it is least. We have just done here. It is least of these 3. It is least of these 3. Depending whether you are covered by the Payment of Gratuity Act or you are not covered. We want half months of salary. So for that, we first need 1 month salary. So what is 1 month of salary? 1 month of salary is 20,000 plus as much of DA as is part of salary. So how much of DA is part of salary? 50%. That is 1,000. So your salary becomes 21,000. What do we have to do now? Half of it. Half. 21,000 is for 1 month. Half could be 21,000 into half for those who are not covered under Gratuity Act. Then this amount for completed years of service. If you're not covered by Gratuity Act, we have done that months are ignored. So we'll not consider 9 months even if they are more than 6 months. So multiplied by 34. And if you're covered under Gratuity Act, your salary includes DA. Whether DA is a part of salary or DA not a part of salary, it shall always be considered. So 20 plus 2, we have 22,000, 1 month and 15 days. 15 days would be 22,000 into 15 by 26. And total years of service would be 34 years, 9 months, more than 6 months considered as 1 year. So we have 35. So see how we are differing just by the virtue of the fact that we are or we are not covered by Payment of Gratuity Act. And 20 lakhs, that is lump sum. His earlier claimed an exemption of gratuity worth 50,000. So 20 lakhs gets reduced by 50,000. We have done this in leave salary also. So 20 lakhs less 50,000. So second figure of exemption would be 19 lakhs 50,000 for both. We differ only with respect to first, the rest are same. And gratuity actually received, we have for 4 lakhs here. So we have 4 and 4. So what are the three figures that we have? 3 lakhs 57,000, 19 lakhs 50,000 and 4 lakhs. So least 3 lakhs 50,000. So taxable gratuity would be 43,000 and your gross salary would be what? Your gross salary would be your basic 20,000 into 12, assuming that you retire in March. Your DA 2,000 into 12 and gratuity 43,000. That becomes your gross salary. And if you are not covered under Gratuity Act, then we have this 444 to 31, we have 1950, we have 4. So least happens to be 4. See, actual amount becomes exempt. And that's why it's essential for us to have the actual amount always as a part of figures computed or considered for the purpose of finding out the exemption. Right? So taxable would be nil. So here gross salary would be just basic and DA. Here we have basic, DA and also commission. Then we have pension. You all know pension is a retirement benefit scheme. Once you retire, till you are in service you get salary, once you retire you get pension. Now when we talk of pension, we talk of two forms of pension. One is commuted, other is uncommuted. Commuted means you surrender a part of your pension, a percentage of your pension in lieu of periodic payment. Means, say you are entitled for a pension of 10,000 rupees per month. If you continue to get 10,000 per month, it is uncommuted, no commutation. You are not getting a lump sum. But if you get the option that for 20% of this 10,000, that is 2,000, your employer gives you an option, which most of the employees do exercise actually, that you do not opt for 10,000 per month, you leave 20%. So what do you get per month? 8,000. And instead of this 20,000, you get 1 lakh one time at the time of retirement. So definitely an employee would prefer to have this. You leave 2,000 per month and get 1 lakh. You invest this 1 lakh elsewhere and you earn that much of interest anyways. Plus that also covers the risk of your insecurity of life. So what is this 1 lakh called? This 1 lakh is called commuted value. This is the commuted lump sum amount of what? Of 20% of pension. How much of pension have you commuted? 20%. So if you have to define 1 lakh would be defined as commuted value of 20% of pension. And uncommuted would be 80%. That is 8,000. Okay. So uncommuted that you get every month, commuted that you get one time. Now for taxability rules, uncommuted pension is taxable for all kinds of employees. You may be a government employee, you may be a non-government employee. Uncommuted pension is taxable. So there is no problem at all. If you have here, say, pension, let's say a regular pension of 10,000 into 12. So what do? We simply multiply 1,20,000, nothing to be done. But if you opt for commutation, then we give exemption like we have done before. And exemption depends upon simply two small little things. One, the fraction. Two, commuted value of full pension. We just did a case, we just did this example that 20, if you commute, you get 1 lakh. So what do we want? We want commuted value of full. Full means 100%. So if the value for 20% of commutation is 1 lakh, what will be the value for 100%? As simple as basic maths. For 20%, it is 1 lakh. So for 100%, it will be what? 1 lakh divided by 20 multiplied by 5 times. So that becomes 5 lakhs. One, we need to find commuted value of full pension. And of that commuted value of full pension, exemption would be either 1/3 or half. Half if you are not getting gratuity, 1/3 if you are getting gratuity. Simple. So exemption is if you receive gratuity, 1/3 of commuted value of full pension. So you will be given in the question commuted value of a particular percentage. Convert it into 100. So that is commuted value of full pension. Of that, if you are receiving gratuity, 1/3. If you are not receiving gratuity, half. So in this particular case, if you are not receiving gratuity, let's say, then the exemption would be half of this. That is 2,50,000. So if you receive commuted pension of 1 lakh, how much is exempt? Exempt is 250. So how much is taxable? Taxable is nothing, 0. There is normally a tendency for students to deduct the lower figure from the higher figure. We don't have to do that. It is the amount received less amount exempted. And if exempted is more than 1, that means you have an exemption up to 250, but since you are getting only 1, that means this entire amount is exempt. Entire commuted pension is exempt. Okay. So we have an example on pension, absolutely on the basis of what we have just discussed. You can give it a try. You have the solution before you. We have the question here. We have the solution here. And in pension, we have an additional concept of National Pension Scheme. This will take up in the next lecture. As of now, we'll stop with the basic understanding of pension. Thank you.